Good morning from London. I'm Anna Edwards alongside Guy Johnson and Chrissy Gupta. We're an hour away from the opening trade. Here's what you need to know. Tariffs continue to weigh on earnings outlooks as Philips downgrades its 2025 profit estimates, while Ford joins other automakers in suspending full-year guidance. Its shares drop in late trading. European and US futures are lower, but the dollar stabilises as China services activity slips to a 7-month low, in contrast to stronger data across the Pacific. Plus, Europe's engine shifts gears. Germany's Friedrich Merz is set to formally take over as German Chancellor this morning. He's pledging swift action.
In the meantime, quick check on these markets. Perhaps a wait-and-see approach from a lot of these equity investors. At least the futures market is indicating that, down about 0.2% for Euro Stoxx 50 futures. The FTSE 100 playing catch-up after the bank holiday yesterday, higher by 0.1%. We'll see if that changes at the open. Cable at a 132 handle, euro at 113. The countdown to the opening trade starts right now.
Tuesday morning, good morning. Do not take your eye off what is happening with the dollar. It is the story right now, and where the buck stops will really matter going forward from here. In the meantime, we are awaiting a trade deal. Still don't have one. Been told one might come this week. We await that story. We're also waiting for the Fed, but the Fed might be quite dull this week. In the meantime, we have plenty of earnings to keep us busy.
Yeah, we absolutely do, Guy. Let's go straight to Philips, shall we? Because that's where we see the negatives of the trade war starting to be expressed by corporates. We'll speak to the CEO of Philips a little bit later on, but they've dropped their full-year guidance for profitability. They're including now a $300 million tariff impact. Interestingly, they're drawing a distinction between the things they know about and can price in now and any further escalation in tariffs that are as yet unforeseen. And who knows where that takes us, because that does remain pretty opaque. I'll start with Philips, but then I'll go to Continental, because I think this is interesting. We're hearing from the auto sector in a slightly more positive light. I mean, maybe that's just testimony to the way they've been really beaten up of late. And this is a turnaround story, a strategy shake-up, an asset sales story. But this is a company that has reported its best first quarter in 4 years because they've seen a sales bounce, but also because they're getting the businesses ready to sell off some parts and cutting costs.
I suspect it won't be enough to move the dial for the auto sector this morning, because Ford is the story this morning.
Yeah.
The overnight story is obviously that Ford has cut guidance. Multiple reasons it's citing for that cutting guidance. That's going to ripple across the Atlantic.
Absolutely. A $1.5 billion cut, or I should say hit to their bottom line. But compare that to like of GM that we had heard last week. That was a $5 billion hit as well. But you are certainly seeing the suspension of buybacks, the suspension of guidance as well. This is an auto sector on both sides of the Atlantic that is freaking out, and I don't think there's a better way to put that. We put that in the Ford in the equity story, but I think the GM credit story is important as well, because they tried to access the bond market issue a little bit, and they did not get the support of bond market investors. They were not able to get a good yield. They were not able to see good demand, which is perhaps the credit market pricing in the tariff worries that we've been seeing so clearly in the equity market.
Yes, and really interesting on the Ford story, digging into some of the things, the factors that they blame for what is going on, the suspension of the guidance. I mean, clearly tariffs is the story, but they go into a bit more detail on that. They give some 7 reasons as to why they're doing this, and 6 of them, I was counting, are to do with tariffs. So just goes to show the many ways that these tariffs impact and create uncertainty at these businesses.
What I'm quite surprised about this morning is the companies that are sticking to guidance and the companies that are pulling guidance. So Philips has reduced its margin guidance, actually in a reasonably kind of accurate way, which is quite interesting. So we'll find out a little bit later some details around what is happening there. Mattel overnight pulled guidance. That's interesting. Obviously, there's a supply chain story there that's going to be coming through in quite a big way. CRH, though, big materials construction company, it has stuck to its guidance, which I'm a little bit surprised about. I thought that would be a company that would be actually saying, we don't know what's happening. Here is a company that moves a lot of stuff around the world, but in some ways actually probably has also a fairly big domestic base in its key markets. Zalando has missed. So there's real kind of interesting mixes in terms of the companies that are sticking to guidance, not sticking to guidance, the kind of accuracy of the guidance we're getting. So it's every company seems to be telling a slightly different story.
They do, and add into the mix another complexity, which is a bit of M&A news this morning here on the European food delivery front. I mean, I don't know if any of these businesses... Is there more M&A to do in this sector? It feels as if we've seen so much. We've got DoorDash agreeing to buy Deliveroo for 180 pence per share. Deliveroo, a business that listed with much fanfare some years ago, maybe never quite lived up to some of that expectation. But, I mean, we've seen so much consolidation within the European space and arguably over in the the United States as well. When you have a company called Just Eat Takeaway already, I wonder if any of these businesses can get any bigger and their names get any longer.
But yeah, I think you made a key point there about the M&A that's kind of almost showing up after a period of volatility that kind of scared away a lot of this M&A action. I think it brings to the forefront this question of, is this the brief calm before yet another storm? And I think you see that on the M&A front perhaps showing up. But then also you might see that in the credit markets as well. We talked about GM having kind of a negative tariff effect. Apple saw a decent amount of yield. They're known for pricing this market. They're accessing the bond market to the tune of about $15 billion. So I think pricing this, is this the brief moment of reprieve that everyone's bracing for?
Yes, and just on the subject of M&A, we're getting some other news lines from Associated British Foods. So I don't know if this is the calm or maybe this is the storm. They're talking about being in talks with Endless, which is the name of another business, on a possible deal. And this after reports over the weekend that the owner of Hovis and others might be about to do some kind of deal with AB Foods. So we'll continue to watch how that one plays out.
Big holder. This is basically a holding company of the Western family. They own the bulk of the business. Endless is a PE company. What kind of a deal are we going to be seeing there? Is this ABF is a number of different businesses. And you do wonder kind of whether or not there's a sort of deconstruction coming here. But it'll be interesting to see what the Westerns do with this and what decisions they ultimately make. It's not Monday, is it? It's Tuesday. We just got deferred M&A Monday.
Yeah, exactly. Took a break yesterday.
Into the Tuesday story. Let's talk about the dollar. I think this is actually probably the story, certainly that macro funds are going to be watching. Any macro manager out there at the moment is going to be paying a great deal of attention to where the buck is ultimately going to stop. What we don't know at the moment is how many unhedged assets there are out there in the world. This could be one of those... There's a potential plumbing issue here, which is really hard to get your arms around and understand what is happening. It could be a life insurer somewhere out in Asia. It could be a financial company in another place. It could be a trade company. There's a number of different ways in which the story is going to manifest itself. But the world has become increasingly underhedged when it comes to FX risk. And you wonder whether or not, if the dollar starts moving like it has been, with like Taiwan is front and centre, whether or not we start to see something significant happening here. There's another question, which is this a policy shift? The Trump administration in some ways needs this to happen. It needs a stronger dollar elsewhere. Are we going to see some of these undervalued currencies coming through? And how fast does that transmission come through into the global economy? This is if you want a tectonic plate to shift, this is the one.
And what breaks? You know, things break when tectonic plates shift, and things usually break when the dollar moves this much, this fast. And crucially, stays there. Because I was looking at what we've seen in stocks and the bond markets, and actually a lot of the movement since the beginning of April in both of those asset classes has been unwound. Certainly in dollar terms. But if you look at where the dollar has moved to and stayed there, it is considerably weaker, and it hasn't bounced back all that much. It's stabilised over the last day or so, but not retracing that downside move.
Well, to the point that it's getting the focus of central banks. We covered this from the Taiwanese central bank yesterday live on the show. But now you're seeing the Hong Kong authorities also talk about active currency intervention. In previous iterations, when you've seen this level of currency intervention, that requires coordination with the U.S. Treasury. I don't think we're getting that this time around.
It's the peg at risk. Things are going to break. What is going to break and how does it break, I think, is going to be really interesting to watch here. We've obviously got the Fed starting. We get into that story in a big way tomorrow. I think Powell's going to want to say absolutely nothing. But I think the ISM Services Index was really fascinating in terms of the inflationary impulse that it talked about and how strong that number was. So I think there's a lot of things going on here. Chinese data was actually quite weak. We're going to fold all of this into the conversations that we're going to be having throughout the show. The dollar is a theme that will run through it. Christina Campany, Invesco, joining us in a few minutes' time. Roy Jacobs, Philips CEO, is going to be joining us as well. Lots to discuss there. What is happening on the trade front? Delphine Arnault, Edmond de Rothschild, joining us a little bit later, as will be Olaf Schick, the Continental CFO. Conti, as Anna has said, out with surprisingly strong numbers this morning. So I think that absolutely fascinating. We'll see what he has to say a little bit later on. Staying with Germany, should we talk a little bit about what is happening with the Chancellor? Germany's new Chancellor, Friedrich Merz, vowing to hit the ground running, being sworn in today, a little bit later on today. Olli Kruk is outside the Bundestag in Berlin. Olli, he wants to hit the ground running. He wants to move quickly. What kind of early indications are we going to see from him that is going to be the case?
Yeah, so listen, guy, I mean, if we look at just the process that's going to go underway here, you know, this will begin with a vote in about an hour's time, and by 3 p.m. today, we're going to have that transfer of power from Olaf Scholz to Friedrich Merz, and really ushering in this new era for the German government, and really a German government in need to deal with a number of different crises. I'd say there are kind of 3 broad categories where Friedrich Merz really needs to establish himself, lay out his priorities, and critically move very, very fast. One is on foreign policy. He needs to establish himself as a force within Europe, as a force within the globe. He has to deal with the tariff issue. He also needs to deal with the power vacuum that exists within the Europeans right now, and maybe asserting himself in a way that Olaf Scholz never really seemed terribly interested in doing. There is, of course, the economic question. This is an economy that has been in contraction for 2 consecutive years. It could face a 3rd consecutive year of contraction if these tariffs bite. That has literally never happened in modern German history. And then the 3rd question is, of course, a domestic question, and that is the question of immigration. They need to crack down on immigration. They need to manage to coordinate that as well across the EU at a time, Guy, when you are seeing the AfD only rising in the polls. They are now neck and neck with the CDU when you look at the polls. And when you think about all of these sort of issues, I think the key question is how fast can they get this moving? Remember, this is a government that collapsed on November the 4th or the 5th, the day that Donald Trump was elected president of the United States. We are now 6 months later, and finally, we're getting a new chancellor. Think about the speed at which things have been going in the United States. That is going to be the key concern for this new government as it's ushered in this new era for Germany.
Certainly one that you have your eye on. Bloomberg's Oliver Crook giving us the brief out of Berlin. We thank you so much. In the meantime, let's get a quick check on the other pieces of data that are on the agenda today. 9 a.m. UK time, Euro area PMIs, the final print going to be hitting the wire as well. Just 30 minutes later, UK PMIs, the final print there, also going to be hitting the wire. We just talked about the German Chancellor being sworn in with Oliver Crook. But then later in the day, the focus, of course, shifts to the United States. At 1:30 p.m. UK time, the U.S. trade balance. Scott Bessent's testimony in Congress does kick off at 3 p.m. today ahead of a U.S. 10-year note auction at about 6 p.m. UK time. So lots going on in Washington, D.C.
Absolutely. Plenty going on out there. Let's update you on some of the other stories you need to know about as well this morning. Bloomberg has learned that Italy's government is unwilling to soften conditions imposed on Unicredit's bid for Banco BPM, potentially prompting the firm to pull the deal. We understand that Rome doesn't currently see any reasons to make it easier for Unicredit to buy its smaller rival, and it's unlikely to change the restrictions it has set out. It did so last month, remember. Other sources telling Bloomberg that Unicredit is likely, therefore, to withdraw its bid if the government doesn't change its mind. Airbus has delivered around 55 jets to customers. It did so in April, a drop-off from the numbers of deliveries we saw in March. Sources are telling Bloomberg the playmaker is struggling with shortages of engines on its popular A320neo models. Airbus previously said it expects output to be weaker in the first half of 25 as it builds planes that don't yet have engines and therefore can't be handed over. Guillaume Faury calls them gliders. He doesn't like building gliders. Bloomberg has learned that Microsoft is the biggest holdout, preventing OpenAI from moving forward with restructuring plans. According to sources, Microsoft, which has invested over $13 billion in the startup, wants to make sure that any changes to the structure protects Microsoft's investment. OpenAI has already backtracked on plans to become a more conventional for-profit company after facing pressure from employees, academics and rivals. Anna.
Coming up on the programme, stay with us for a conversation about defence technology with the CEO of the European drone maker Tekever. That's later on in the programme. Plus, Hugo Boss says macro uncertainties are weighing on global consumer sentiment. It's not the only company reporting earnings with concerns about that very subject. We'll check on some of those firms at the open. Up next, the dollar snapped its recent losing streak, but does it reflect a broader change in sentiment for markets? We will certainly discuss FX markets. Really interesting moves, as we've been saying, over in Asia. We'll get views from the Markets Live team later on that. If you have any questions for our guests, if you want to get involved in any of the conversations around this desk, IB plus BBTV Go. That is the function to find on the Bloomberg terminal. This is Bloomberg.
America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital market and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you.
going to be on the Hill a little bit later. Pay attention to that one. Treasury Secretary Scott Bessent speaking at Milken, the Milken Institute Global Conference, which is taking place. If you can have a conference anywhere, Beverly Hills has got to be definitely up there, doesn't it? Let's talk about what is happening with the dollar this morning. A little bit of ground regained in the Asia session. It's been a couple of days, though, hasn't it? Central bankers from Taiwan to Hong Kong said to have intervened in the market to bring some stability. How long will that stability last, and how big a risk are we watching with global markets? Val's pulled it all together. Here she is.
Guy, those are some big questions that investors are grappling with today, but it's nice to see, at least for now, we are seeing some stabilization in Asia FX. The Taiwanese dollar did find a firmer footing at the open yesterday, but it goes to show, though, the last two sessions prior to this were some pretty historic moves in the Taiwanese dollar, appreciating rapidly. And there's still a lot of discussion out there, Guy, on whether this marks a policy shift from the Taiwanese central bank, allowing this appreciation to happen. Does that mean that there's more appreciation to come? And broadly, these Asian FX economies, will they be maybe not wanting to be seen manipulating their currency weaker as these ongoing trade negotiations happen with the U.S.? I think that's the conclusion that people are talking about. Whether FX appreciation, especially in Asia, is going to be a key consequence of these trade negotiations with the U.S. as perhaps these economies try to rebalance and stimulate domestic demand instead of their exports instead. I also thought it was interesting, Guy, that on the back of these moves, we saw gold strengthen quite decently yesterday. Maybe perhaps gold is now the trade for de-dollarization. Previously, we saw it going into the euro and the yen, but the yellow metal really outperforming the last two sessions. I want to end on a somber note, Guy, and that is the historic run of the S&P 500 has come to an end. In the last 9 sessions, we notched over 10% of gains, 9 straight days of gains for the S&P 500. That came to an end yesterday with the S&P down some 0.6%.
Had to come to an end at some point. Valerie, thank you very much indeed. Valerie Teitel. Let's get back to the dollar. Christina Campany, Senior Portfolio Manager at Invesco, joining us around the table this morning. I'm going to ask you my favourite question of all time. Where does the buck stop? How much lower does the dollar go? How fast can this move be, and what are the implications? That's a big question. There's a lot wrapped up in there.
Thank you guys so much for having me on. Definitely when we think of all of the moving pieces going on right now, it does feel like FX is the primary channel where all of these economic implications can come through. And I think the combination in the U.S. of stickier inflation, softer growth, and a neutral to easier Fed, and I think the Fed is the one global central bank that we maybe have the least clarity with in terms of...
Can we get some more tomorrow?
I think Powell, to what you said earlier today, wants to sit on his hands as much as possible. And wait, you have so many missing pieces. We don't know the path of what the intentions of the policies administration is from the government in the U.S. And there's so many pieces. What's the magnitude? How do they impact? When do we see the growth? So I think they're trying to take a step back and wait as long as they can. So when you come back to FX, I think that means that the dollar kind of remains on the back foot in the kind of medium to longer term. How quickly we get those moves, I think that's unclear, but can we be talking about a 125 euro in 9 months, a year? Sure. 6 months?
Okay.
Possible.
Okay, that's what we could be talking about. And where does the pain come through most clearly then, do you think, Christina? Because often emerging markets are the place you'd look to and say, well, what's going to break here as a result of this swift move in the dollar, substantial move and sustained move in the dollar? I mean, we talk a lot about the Taiwanese dollar, the Hong Kong dollar, the peg being defended there. Are those the pain points we're looking for, or do we look elsewhere?
I think actually kind of the backdrop with a weaker dollar and the Fed kind of where they are actually gives room for emerging market central banks from here to ease if they need to. They're less concerned about inflation. So it feels like while it's a broad dollar story, it's a lot of the G10 currencies that I think can be the drivers. And when we think about constructing our portfolios, what are the anchors we want to have? We want to have euro and yen. It's the surplus currencies. It's the kind of large net positive
float.
Currencies.
So you're not too worried? You think that the central banks in Asia can contain this?
Look, I think there are, when we look at what's gone on in Taiwan this week, we say, what are the other potential places? And there's a lot, right? Like, you have globally massive dollar investments that are unhedged. So the situation that you had in early April of sharp equity drawdowns with the dollar drawdowns at the same time, I think those are what causes pain for the market. But I don't think that that's people have to go out there and sell their U.S. assets. It's just will gradually reprice, and that allows the rebalance for people.
Where do emerging markets fall in all of this? I mean, is the carry trade still popular or even worth pursuing in a place that does see these very quick moves similar to what we're seeing in Asian FX right now?
Yeah. So I think that has kind of been debated, and there are places that there are certainly opportunities. We look at that it can be a trade, right? Emerging markets in many cases have higher volatility, and you have a backdrop now where rates in the U.S. and globally are much higher. So to justify kind of the vol, we think of it as more of a trade, and when there's an opportunity to be in Brazil or to be in Mexico. But it's kind of harder to justify as a standalone, like I need to be in every single EM market because there are higher risks and there's a lot of volatility.
When you do look at some of the Asian, I'm bringing it right back to where we started on the Asian FX story. So much of that is the dollar move to the downside, but it also feels like it's a little bit of an oil story as well, especially when you're looking at the likes of the Japanese yen. Does the oil market serve as some sort of signal to a lot of these currencies?
So we've been talking about that a lot because it feels like there's a lot of negative sentiment in the market broadly, but different asset classes are reflecting that really differently. And I think the equity market seems to be, the oil market seems to be pricing kind of that most negative, followed by front-end rates pricing in the Fed going. And obviously we've come back a bit from Friday's with payroll report, but we were pricing almost 80 basis points through funds and twos. But equity markets and credit markets have been a lot more resilient. And I think we've had these bifurcations. So are the oil markets a canary in the coal mine? I think we'll see, but I think it's certainly something to look out, to watch.
How much chat is there about the fact that what we're seeing in Taiwan and potentially other places is that this is a policy decision? That this FX move is going to get wrapped up in the kind of the wider trade narrative, the trade talks, the conversations that are happening with the Trump administration. Is this the start of something structural?
I think it's a real discussion point, and I think it's something that markets are contemplating. I think certainly maybe in Japan it's the clearest case because it feels like it works to the outcome initiatives for both administrations, or both Japan and the U.S. Trump administration to get there. But I mean, again, I'd go back to, we sit here and we don't know what the objective of the administration in the U.S. is of all of these policies, and there's so many things, and we haven't gotten some of the growth positive. So we've started the beginning of the year saying, okay, we're going to have tariff, we have immigration, but we expect to have tax to balance it out. And we haven't seen those growth positive ones. So I think that we sit here kind of waiting to see how all of the puzzle pieces come together.
We'll see if it comes up together in the back half of the year, as the Trump administration keeps saying it will. Christina Campmany, Senior Portfolio Manager over at Invesco, joining us around the table this morning. Coming up, we go right back to the earnings story. Philips cutting its profitability outlook as it keeps a close eye on the potential impact of tariffs. We're going to speak with the CEO, Roy Jacobs, next, given their numbers looking pretty decent when it comes to profit. But the China story, the tariff story, still weighing on their bottom line. We're going to have that conversation next. Stick with us. This is Bloomberg.
Thirty minutes from the opening trade this Tuesday morning. London rejoins the fray this morning after being out yesterday. Obviously, the back end of last week also impacted by holidays across Europe. Today, you could argue in many ways we're going to get the first kind of clean read as to, therefore, what the European equity picture looks like. A lot of corporates that we've got to be folding in as well. Futures picture at the moment, fairly flat, a little bit of a tick higher for the FTSE 100. There's actually a bit of kind of corporate activity that we need to fold into that as well. You've got ABF and DoorDash firmly in focus. The CAC Quarante going nowhere in a hurry.
Seeing some moves, however, in the bond market, specifically when you look at the French 10-year, for example, higher by 2 basis points. The German 10-year as well, higher by 3 basis points. One eye, of course, on Germany as Chancellor Friedrich Merz gets sworn into office.
Yeah, political change in Germany, certainly a big focus for us. Corporate earnings, though, and the effects of tariffs, also a big focus. Now, Philips is cutting its profitability outlook for the year due to rising trade headwinds. This despite the Dutch medical technology firm beating estimates for first quarter earnings. Let's speak to the Philips CEO, Roy Jacobs, who joins us now. Roy, very nice to speak to you once again. Thank you very much for joining us. So you've come forward with some quite specific assessment. You've got a number for us, 300 million euros, the tariff impact on your business. Tell us a little about the amount of certainty and visibility you have there, because some businesses have just ripped up their guidance and says we can't say.
Yes, we actually see an unfolding picture that has two parts. One is, as you saw us coming into the quarter, actually we had a slight beat on our outlook. We have strong order momentum, and also we remain our sales guidance for the year. We see the underlying fundamental demand for healthcare innovation and also our consumer products actually strong and resilient. At the same time, we have been reflecting in what we know now on the announced current tariffs. So we have been reflecting the impact of China-US tariffs, as well as the 10% for rest of the world. And we assume that after the pause, it goes back to what was announced on the 2nd of April, because that is the knowledge that we have now. We have offset that with very substantial mitigations, where actually we are driving a supply chain big program to address the current challenges and further optimize our supply chain. We have been doing that for the last 2 years, and we continue to expand that. We're also driving very decisive cost action to ensure that actually we stay competitive. And then we had kind of reflected the net impact into our profit and cash guidance. But we see underlying momentum and also fundamental demand for our products continuing. And I think that's the story that we see unfolding into the year.
OK, no doubt there'll be questions on China then, with your seeming confidence in the sort of background of the business. But we'll get to that in a moment. Just on what you're doing to address the tariff risk then, Roy, you talked there about supply chains. For the past 2 years, you've been addressing your supply chains. Does that mean more of what Philips makes for America will be made in America? What plans do you have on that front?
Yeah, I think the regionalization, localization trends we have actually seen starting after COVID. So in China, by now, we have 90% of what we actually sell in China also manufactured in China. We also have been working on further regionalizing in Europe for Europe and in Americas for America. What we need to accelerate is actually what we produce in the US for the US. We already currently have 46 locations in the US. We produce our ultrasounds, some of our monitoring, our world-leading magnet helium-free in the US, but we also bringing more into the US. We just announced a multi-million investment plan in Minnesota. We will be making some of our cardiac devices. So we will accelerate that into US production. But it actually is on a longer-term trend where people want to actually have their products made closer to home. And that's actually what we see happening now also in the US, and then driven by the support of tariffs.
Roy, it's not a secret that having that Made in America stamp on all of these products is an expensive venture. If you're leaning into that nearshoring narrative, how expensive is that for you?
So that's why we, next to the supply chain actions, take very decisive cost measures. Because what we do know, we only have very selective pricing availability in healthcare, because we need to keep it affordable, we need to keep it accessible. So we need to find offsetting measures. And that's also what we have been driving since actually 2 years. We have to date been delivering 1.9 billion of productivity. We announced that we will drive 800 million of additional productivity this year. We are on track of that in the first quarter with 147 million of productivity savings delivered. And we're looking at every cost line, how we can offset this, so that actually this doesn't go at the expense of our customers and patients who are in need of our innovations. And we remain very competitive, as also showed in our order intake growth. So we're taking the measures to offset it, whilst at the same time making our supply chain more robust and resilient. We also have been showing that we can do that. For example, in China, for the last few years, we have been working on this without kind of going into the market with significant price measures. So if you kind of work this over time in a structural manner, you can also do this in a way that actually you don't have to increase your prices. It's just very certain moves that are not that easy for a regulated healthcare business to do, that actually makes it a bit of a shorter term issue that you need to absorb now. But then you would expect that you can mitigate this over the longer term.
So, Roy, speaking of that price inelasticity and the cost measures there, we're looking at an adjusted EBITDA margin outlook as well for the full year. Is that what's driving that drop in those numbers?
Yeah, so if you look, so the underlying fundamental demand and actually our plan is working and we are fully on track where we started the year. The only thing that we have reflected in is indeed the net impact of these tariffs. So that's something that has been reflected in this 300 million of 250 to 300 million of net impact. But the rest remained the same. Actually, we are encouraged by what we saw in the first quarter because we saw also personal health, our consumer business coming back into growth with very strong growth outside of China, where we still see double-digit decline. So that actually is encouraging. And also on the health system side, we saw the order book and the order funnel really strengthening. So we see that this fundamental demand still remains strong, but we need to offset it with kind of some of the realities that we kind of take into consideration. We also know it's a very fluid situation, so we don't assume this will be the fixed realities. We'll have to see how it unfolds. But we thought it was also prudent to take currently the current realities into account, so that actually we keep tracking and also taking the mitigating actions in line with that.
Roy, good morning, it's Guy. Are you currency hedged? To what extent are you currency hedged? Does your geography help you with your currency hedging?
Yes, indeed. So we have, if you look to our global footprint, a very extensive both sales and cost footprint. So actually currencies do weigh in, of course, to a certain extent, but we also have a natural offset in terms of the locations that we have. Of course, we reflect into the sales what kind of the comparable growth is. You have seen that coming in. But FX is something that we actively manage through the footprint. If there's a specific need to adjust for it, kind of we can also do that. But this is not the biggest theme for us. We are very much focused on the innovations that we drive. And there actually you see that also with the latest of AI coming in, you have a real case for driving productivity of our customers because they will also face inflationary pressures. So we will need to help them to drive their delivery of services in a more efficient way. And that's actually where our innovations, including the latest of AI, can really support them.
I'm glad you take us to AI. Are we going to find ourselves in a situation where your Chinese customers have a different product to your American customers, and there is going to be a clear separation when it comes to the AI products that you can offer in each jurisdiction? Is it also going to be possible that it's going to be easier, for instance, to build magnets in China than in the United States as a result, potentially, of rare earths shortages being represented in China, in the United States? How different are the Chinese markets and the US markets going to feel going forward? How separate do you think they will ultimately end up being?
Yeah, when you look at healthcare, actually you see, and that's already the longer term situation, that diseases are global. When you look at cardiac care, when you look at how we treat stroke, these are situations that are not different whether you're a Chinese patient or a US patient or a European patient. But the healthcare delivery has always been very local because the local systems, how you deliver care, are different. And also the context in which you have been delivering care is different. So that's, in that sense, not new versus the current situation. You will be developing innovations that you can apply across the globe. When we had our helium-free magnet, as you indeed call, which is the first to world, actually we have been developing it in the US and in Europe. We are exporting it to China. But at the same time, we're also kind of making sure that the next generation we can also produce in China. So that's make sure that we somewhere develop the latest technology and innovation that we then make accessible towards the whole world. And that's something that actually has been a trend. With software and AI, you can actually do that in a more easy way. But at the same time, you need to make sure that's locally relevant because a Chinese patient is different in certain aspects also from a European patient. So you need to test it on the data sets in these countries, and that's also what we're currently doing. So we are looking at global diseases, how you can locally apply and work in a relevant system, and that's actually where you really can support the customers in delivering the best patient care.
Roy, thinking about science and innovation, there is some concern in some quarters that science in the United States is going to come under political pressure. European politicians are trying to make this into an opportunity for Europe, it seems. I know that we heard yesterday from Ursula von der Leyen talking about Choose Europe for Science. The UK has a plan. It wants to put some money behind to try and encourage scientists to come to Europe. Is this an opportunity for Europe?
I think we strongly advocate global collaboration of science. I think we need the combined brain power of the world to solve the biggest challenges in healthcare. At the same time, we also have been advocating for EU to become more competitive and to actually invest behind science. So Europe investing behind science is something that I wholeheartedly support. I think we need to support science across the world and also leverage the insights that we get from it. We very closely work with scientists, with hospitals across all countries of the world where we operate. And that actually makes how we come to new innovations. If you think about our smart speed algorithm that doubles the scan kind of productivity, it's something that we delivered and developed with a local healthcare system in the Netherlands. If you look to the helium-free, that was something that we actually developed with support of the US system. And if you look to some of the latest CT innovation, that actually we developed in China. So you see that within a local ecosystem, working with local scientists, with local hospitals, you can find new solutions that you then make accessible to the rest of the world. And we encourage every country to keep investing behind science.
OK, we're going to leave it there. Roy, thanks for the time this morning. Really appreciate it. Really interesting conversation. So thanks for joining us right here on Bloomberg. Philips CEO Roy Jacobs. What have we got coming up for you? We've got a lot of stocks that we need to be watching this morning. The German car parts sector very much in focus. Conti has revealed its numbers. It is saying that it's more than doubled earnings in the first quarter. It's actually got a fairly good and interesting guidance story to talk about as well. We'll talk about all of that next. We've obviously got to fold the full story into what is happening with the car sector too. We'll do that next. 17 minutes to the market open here in Europe. This is Bloomberg.
What the administration wants to do, in my opinion, is not wrong.
He, I think, did the right thing in pausing tariffs, reciprocal tariffs for 90 days. And I think the next step probably should be, I call it a 180-day pause, take down the China tariffs.
You can sort of see the administration walking back some of the more novel ideas they've come up with. To quote Queen Elizabeth, just stay calm and carry on.
The level of engagement everywhere around the world is absolutely tremendous. It's about scenarios right now. It will turn into action further down the year.
Keep calm and carry on. It feels appropriate to be talking about right now. Those are the thoughts on President Trump's tariffs made from some of the world's most senior business leaders at the Milken conference, which is taking place in Beverly Hills. Keep calm and carry on. It's Kriti Gupta keeping calm and carrying on. Let's talk about what's catching her eye this morning.
I am all about Apple this morning, but not through the traditional equity lens, not through the traditional iPhone lens, but this time through a credit lens. The number you need to know this morning is $4.5 billion. That's how much Apple issued in terms of bonds yesterday, met with a $14 billion order book. So seeing quite a bit of demand for one of the world's largest companies. But I think it's the timing that really matters here, because every time Apple comes to the market, they tend to have a pretty good track record of pricing it in, of timing it very well, and followed by a big yield surge all the way going back to 2013. That's what this chart shows, that every time Apple issues bonds, signified by these blue lines here, a yield surge follows, which is interesting that they are now potentially, if this is some trend to go by, forecasting some sort of yield surge that comes forward. Now, this is crucial because when you talk about the pricing of this deal, we're talking about pricing in a yield of 50 basis points above Treasuries. That is lower than the amount that you had in their 2023 sale that was priced with a yield of 80 basis points above Treasuries. Anna, there's two ways you can interpret this. One is that there is record demand for this particular bond issuance, this idea that Apple is thought of as a safe haven. There's also a question here of whether or not they're actually pricing it at a crucial time and at a level that is lower than the last time around. Is that really something to be said about Apple, plagued by the issues of tariffs and the geopolitical volatility, or more a message about the credit conditions that we're in?
Yeah, and it certainly takes us into conversations about the amount of supply we're going to get in debt markets as well. Kriti, with her eye on corporate credit right now, a theme we'll return to later in the programme. Joining us now to think about some of the macro themes in markets in 3 minutes, our Markets Live executive editor, Mark Cudmore. Mark, good morning to you. Help us, international investors, understand what do we need to know about the defence of the Hong Kong dollar peg, the Taiwanese dollar and its surge, and all the questions surging around that. From an international perspective, what do we need to know about what's going on in Asia FX right now?
I think we need to know that this is the next leg of the general slow depreciation of the dollar theme, but that it has got carried away in low liquidity markets. Remember, we had holidays across much of the region, and so these moves are really kind of exaggerated and stretched. And this is not some, I mean, the moves were 7 sigma moves that you shouldn't see in your career trading dollar Taiwan. So they really were quite extraordinary. They're not the start of like of a continuation of that kind of trend across currencies in Asia. But this is, and we've talked about this a lot over the last couple of months, this is going to be like a lower beta version of the 2000s, where the world is going to move from being very heavily leveraged into US dollars to realizing that they want to diversify their holdings more broadly. This is not about abandoning the dollar entirely, it's about just lowering their exposure to the dollar. And that's going to be the theme of the next few years, and it's not normally going to play out in the space of just 2 trading sessions like we've seen in dollar Taiwan, but we are going to see some temporary dislocations because we're in the middle of a regime shift, and regime shifts happen over several months, and we get those temporary dislocations.
Mark, we have, though, in history seen some fairly big FX moves that have profound effects, and I'm just wondering whether or not something breaks. The world is largely unhedged at the moment, and that means that it's vulnerable.
I think there's a real risk. So first of all, you know, I was asked earlier on today, is there a risk that these moves get underestimated and how far they can go? And I think, yes, that's always the case. People are very tame in their predictions. We've talked quite a bit, Guy, on this show about I think euro-dollar goes to 130 before 104. That was back when it was around 107 level. And, you know, I was just being conservative. I think, it's, you know, that's a 20% move, and I think that's what we're talking about. But over the next few years. Now, in that multi-year path of a 10, 20% dollar decline, we're going to get brief moments of really exaggerated moves. And does something break? Yes, short term. Now, not break as in the financial system breaking, but just we get sudden capitulation moves in certain currency crosses, kind of like we've seen in dollar Taiwan in the last couple of days. And are there going to be spillover consequences to other assets? Yes, because as you say, many investors haven't been used to this regime change in FX and what's happening. So some things will break, but not financial system level breakage.
Mark, we had a guest on the program earlier talk about a euro that could potentially hit 125 within the year. Is that viable given the massive moves we're seeing in the dollar?
Absolutely. As I said earlier, Curdy, I think, you know, 130 before 104 is what my motto all year. That's become a bit of a stupid thing to say. If we get above 120, I'll have to change, you know, the lower limit. But I think there's lots of topside. I don't know exact timeline. 125 for the end of the year is not particularly ambitious in the scale of this move. It's perfectly reasonable. I'm not saying I'm highly convinced we get there before the end of the year. I think that the euro story is structural, and it takes a lot of time to play out. But the dollar story is also structural. It takes a long time to play out. So you've got 2 big structural stories, and they're supporting euro dollar for a big move. What time span, I don't know.
113.30 on euro dollar this morning. We'll see if we get to the Mark Cudmore level of 130. We thank you so much, Bloomberg Markets Live executive editor, joining the program this morning. Get a more up-to-date analysis from him and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So Phillips margins looking a little bit weak today. This is mostly due to the worries around the tariffs. Of course, now this stock had a bit of a bad run already. We did see a drop down in February following some weak orders from China and then hit by the broader trade war worries in April. Not quite recovered from that, but potentially we're going to see more weakness on this one today. Not a single sell rating, though, so clearly positive on the analyst front, but worth watching Phillips in Amsterdam today. Then in terms of Continental, looking a bit stronger on this one. A rebound in the earnings. We've seen a jump in some of their earnings, so the best quarter in 4 years for the company. Now, we have seen a bit of a rebound in that stock as well, up around 12% over the past year, and just a single sell rating standing out on that stock there. Potentially they're going to be disappointed because I am seeing that stock called higher this morning. Then in terms of miners, a story catching my eye, Peabody Energy potentially going to walk away from a deal to buy Anglo-American's steel-making coal business. This was due to a fire over in Australia. We can see Peabody Energy shares jumped around 6% yesterday. JP Morgan writing in a note today that potentially investors might take this news as a signal that a takeover, a full takeover of Anglo now may not take place in the next few years. So this is potentially going to be weaker in London for Anglo-American today. We can see that stock has had a bad run over the past year. We're down around 20% over the past year. Potentially more weakness as Peabody looks to potentially walk away from that deal. It is worth around $4 billion. Keep an eye on Anglo in London.
OK, that takes us nicely, Joe. Thank you very much for that. Equities reporter Joe Easton into a conversation about asset sales and M&A. And BP, we should mention, certainly in focus this morning. I know the team talked about this yesterday from the Shell side. We got the weakness, if you like, in the share price as a result of that for the Shell perspective. Today, you get BP. That could pop a little higher. And then we've got all these other M&A deals we've been talking about.
The BP thing's fascinating. Would the UK ever allow BP to be taken over by a foreign company? No. Shell is now a UK company, firmly, and as a result of which, it is the most logical choice. Could this happen? I think it's the only one that could happen. And the troubles that BP faces right now probably make it increasingly likely. If you're in merger arbitrage, you look at this and go, there could be somebody else coming in. Well, no. So does Shell have the whip hand here? I just wonder whether it's in control of this narrative.
It's interesting. To your point, it was a long time coming, but yesterday in yesterday's trade, we did have the UK not, of course, trading. We had like Total reacting to it as well. A lot of the other global energy players, and even in the States, were very much had an opinion. So that's something we're going to be digesting next.
We will talk about German politics as well. We're waiting for Friedrich Merz to be confirmed as the German Chancellor. That comes around the same time that European markets open. This is Bloomberg.
Tuesday morning, good morning. Couple of minutes to go until the opening trade. First full proper session, you could argue, of the week. London was out yesterday. Today we get back to it. Lots and lots of stories to kick around. The overriding one is what is happening with the dollar. But let's talk equities now and figure out kind of what yesterday told us. The equity session out of Europe, not very much. London was out, was a low volume session. A few little corporate stories that were percolating away. Plus we were watching very carefully what was happening in the States. That's where things were interesting, particularly things like Ford and what was happening with Palantir. And that's all going to ripple through into today's session. But in terms of where we went out yesterday, it was here. We finished a little lower. There's a little bit of a drag, therefore, coming out of the US session yesterday into European futures this morning, which looked pretty uninspiring, if you ask me, Credit.
Uninspiring, but perhaps recovering. A little bit of a catch-up trade because, as you said, the last 3 days, last three trading sessions, the UK and Europe have not been online at the same time due to a series of bank holidays on both sides of the channel. But outperforms the FTSE 100 this morning. A catch-up trade, if you will, higher by 0.4%. But I'm going to bring your attention, Anna, to what we're seeing in S&P futures because the weakness does show up there after a historic 10-day run in the S&P. A breather on the other side of the Atlantic.
Yes, indeed. A breather from that rally and perhaps those Ford numbers, Nasdaq futures also weighing on sentiment. Let's, though, quickly look at some of the European companies that could be on the move then this morning. And M&A screams loudly across these markets today, or the prospect of it at least. That brings BP into focus. Could that stock be considerably higher? The ADR climbed yesterday when London was closed. We saw Shell responding. This after our colleagues have been reporting that Shell is working with advisors to evaluate a potential acquisition. Continental in focus as well. Could that one move a little higher at the start of trade? They still see their automotive adjusted EBIT margin around where it was. Philips in focus. They've adjusted for Tariffs, Guy.
OK, here we go. Time for the Tuesday session. The recent equity rally feels like it's going to run out of steam a little bit today, but we have Europe back online. Everybody's back online. The FTSE 100 is back. There you go. And it's doing absolutely nothing. There you go. FTSE 100 up by less than 0.1%. We've had this decent rally recently. Feels like potentially we're either going to plateau or roll over a little bit. We'll wait and see exactly what we are going to get. A little bit of traction now starting to come through. The FTSE's up by 0.3%. Maybe a little catch-up that needs to be folded into the narrative as well. Because look at the 600 doing absolutely zero. The stock 600 flat as a pancake this morning. The AEX out of Amsterdam. We're watching what is happening with Philips there. It's up by 0.3%. The IBEX is up by 0.3%. The CAC is up by 0.2%. These are inspiring moves. FTSE maybe a little bit more exciting. A little bit of a catch-up trade maybe coming through. And actually a little bit of M&A to fold into the narrative as well. So, Crudy, what are we seeing at single stocks? What are we seeing with sectors?
Well, that M&A story is the exact mover of the UK. Traditionally, we start with the stock 600. I'm going to start with the UK this morning. Your biggest index contributor to the upside is BP. Your biggest index weight is Shell. So right out of the gates, you are, of course, seeing this potential oil consolidation story. And a Bloomberg scoop, might I add, moving this market. So it is a bit of a catch-up trade. M&A Monday turning into M&A Tuesday, Anna.
Yeah, absolutely. The two.
We'll call it Tuesday. Should we call it? It feels like a Monday today.
Yeah, guys, really reluctant for us to make it feel like a Monday. Yeah, let's call it a Tuesday. I know you were here yesterday, Chrissy, working very hard for the European audience. Let's talk about what's going on elsewhere in the sector's story. Autos and parts actually not doing too badly, and Continental is part of that story, up by 3.5% on the back of those numbers. Given the amount of negativity we've had around that sector, perhaps that's not a surprise. And then some of the sectors that frankly just did well yesterday in Europe, real estate, for example, are in retreat this morning. So the real estate sector, healthcare, basic resources are either flat or negative.
It's interesting. Shell's now turning around a little bit, which is worth paying attention to as well. So we're just going to keep an eye on what is happening with Shell. It is now in positive territory. In fact, the energy sector broadly looks like it's rising as well.
Oil price is actually up 2%, which, given the big sell-off we've seen, is maybe not the whole story at all, but that is at the margin of interest.
Novo's softer. Coloplast is softer. I think it's got numbers out this morning. You've also got a few ex-dividends that are worth noting in the market as well this morning. Defence stocks are also moving high. You've got Rheinmetall and BAE Systems both adding to the upside as well. In terms of the themes that I think we're watching run through this market this morning, I think M&A is definitely one of them. I think we just need to see a little bit of settling down in terms of what we're exactly getting here and what is going on. But in terms of the sectors, energy is the big gainer. On the downside, as you say, healthcare, a little bit of weakness, real estate, a little bit of weakness, technology, a little bit of weakness. But I think the only sort of discernible story comes at the top, with energy and auto parts being the two big gainers. You've got Conti out with numbers. But it's interesting that the auto sector is higher on a day when we've had the Ford warning coming through. The call I saw overnight was that actually European autos may be weaker on the back of this. But actually, it looks like maybe that isn't happening as the DAX comes through and opens up and gives us some numbers. We've got the DAX, we've got UniCredit's interesting, up by 0.5% as well. Credit.
Yeah, some of the banking changes over in Italy as well. I should mention one more on the stock 600, because overnight we did hear some comments from Donald Trump actually talking about pharmaceutical tariffs coming in potentially the next 2 weeks. So Novo Nordisk, which had a little bit of a moment in the sun, given their two major positive stories for them. Now your biggest weight on the stock 600 this morning. Plenty of cross currents. It's a micro story this morning. Let's bring in Delphine Arnaud, multi-asset portfolio manager at Edmond de Rothschild. Delphine, a pleasure to have you on the program this morning. Thank you so much for making time for us. Walk us through the go-to story this morning for you. When you're talking about trading a multi-asset portfolio, how closely are you watching headline risk? How quickly are you buying every dip?
Hi. Nice to be on board with you. This morning our analysis of the market is that after this strong rally, almost 10 days of positive performances from the S&P, our mood is more on sell the tops on equities, diversify the portfolios of equities around across other sectors, other markets, and toward more value exposure. And also on the FX, we think that it's time to diversify toward other currencies than US dollar. Because after several years of US exceptionalism with strong US growth, very high quality earnings growth coming from tech sector in the US, a proactive Fed, and a very dynamic fiscal budget, I think that Trump is quite ending this beautiful story, and it's time to diversify outside of the US.
Delphine, that's been the narrative that's been driving, of course, the U.S. dollar quite substantially. But you talk about the fiscal story and the investment coming in the States, perhaps the resilience of these U.S. Companies, the U.S. earnings as well. Walk us through how the narrative of nearshoring or reshoring factors into some of the individual equities that you pick, not only in the U.S., but in Europe as well.
Yeah, there have been several announcements on reshoring companies, U.S. companies, and also European companies implementing new buildings in the U.S. There are stories, but the fact is that half of imports in the US are for corporates through capital goods and through inputs. And half of inputs will hurt consumption. And so our analysis is that, yeah, there are intention to reshore, but when you build a business plan, it will be more complicated than that, and input price and increase will make it even more complicated. So if you're a corporate, would you increase your investment in such an uncertainty environment? Would you increase investment knowing that consumers are gonna struggle given the tariffs? They are already struggling given higher price and the economy starts already to slow down.
Delphine, I wonder if are we at risk of overdoing the negativity around the US? I was listening to Mark Rowan of Apollo yesterday, who gave us a more positive view on US exceptionalism, saying that currently the US is risking moving from just hyper-exceptionalism to just being exceptional. Do you still recognise that at all?
We used to recognize that a lot. Of course, for the last 3 years, it was the main thematic on the market. Now we are much less confident about this thematic of U.S. exceptionalism. What we saw during the April month's drawdown, it was like an emerging market behavior with equity markets falling down, dollar selling off, and U.S. Treasury not helping at all and bring stressed too. I think that it will leave some damage for foreign investors. For instance, in Taiwan, the Taiwan regulator is currently looking at insurance pension funds portfolios and to see how they can be stressed by depreciation of dollar and higher rate hike because pension funds in Taiwan used to invest in U.S. bonds, not hedging their dollar. So in this case, they have to reallocate outside of the U.S. or at least to hedge the dollar. I think that the safe haven we used to see in the U.S. dollar and U.S. Treasury, the April drawdown show us that it's no longer the case.
Yeah. And Delphine, where in Europe does money flow to then? We've seen some of this trend already. We're waiting for the German Chancellor to be, the new German Chancellor to be confirmed today. That politics evolving as we speak. Delphine, where looks attractive to you in Europe?
Yeah, we're looking in Europe to more domestic companies. We like high growth companies, and we love to see lower valuation companies. So these three criteria lead us to the small caps in Europe. They are more domestic. They are quite cheap after suffering for the last 3 years, and they tend to have higher earnings growth than large cap, which was not the case for the last years. But thanks to this German stimulus and the pivot of the European economy toward a more supportive economic environment, we think that's a good place to be. And outside of Europe, we are also, like other geography or countries that may sign the first negotiation contract with Trump. We think about India, maybe Japan. But what we've seen in the negotiation with Japan, for instance, is that Trump doesn't want to negotiate the 10% minimal. It should be a minimal tariff rate, and only reciprocal tariffs are negotiable. And also sectorial tariffs, for instance, on car or on steel, they doesn't seem to be negotiable. So careful about sectorial allocation.
Yep. Delphine, I'm going to leave you there. Great stuff. Thank you very much indeed for joining us this morning. Delphine Arnaud, multi-asset portfolio manager, joining us from Edmund de Rothschild. Let's take a quick look at where the core six looks this morning and get an idea of what is happening across the board. As you can see, a little bit of weakness creeping in at the centre of the board. Ferrari, I think, has numbers out a little bit later on. ASML, Schneider, both south this morning. Nestle, a little bit of a safe haven status around that. LVMH doing nothing. Some weakness in Novo, as Critty was talking about a little bit earlier on. Let's get the details of what is happening elsewhere. There's some interesting stories to focus on. Here's Joe.
So Philips a little bit weaker in the opening trading in Amsterdam. Was down almost 3%, close to that at the open, but actually coming up a little bit now. We're only down 0.7%, missing mostly on the margins following weakness in some of the orders reported early this year. And, of course, the big topic today was the tariffs and the impact of that. So the profit outlook not very strong, so a bit of weakness, but probably not as bad as we had expected on that stock move there. Then Continental rising as we did expect. The margins looking a bit better on that one. That stock actually having a decent run now following weakness in the previous year, but actually rebounding a lot. I think we're up around 15% on a one-year view for that stock now, so pretty positive for that one. Then in terms of some other earnings, Hugo Boss standing out, up almost 10%, a big increase in some, or a big beat on some of their sales numbers. Now, the thing here, according to analysts, is they are doing a lot more discounting according to that. So potentially it's not driven as much by the strength in demand. It's more the promotions, cutting prices on some of their products, and that is helping them today, helping the stock. And we're up almost 10% for Hugo Boss today in Germany, a big mover for that one. Then Vestas as well. This seems to be a bit of a relief that the company hasn't cut their guidance. Their cash flow orders looking strong on the power unit. A lot of uncertainty, of course, related to the US orders and the US projects. But given no downgrade today, that does seem to be a bit of a relief, maintaining their earnings guidance. So Vestas, a bit of a boost for that one. Then in terms of BP reopening after the long weekend and the headlines from our deals team at the weekend, of course, around Shell potentially looking at BP, but going to wait to see if the stock price comes down and oil prices come down. So not really moving into that as a deal in the near term, but just looking at whether they would do that. And we are seeing BP, one of the best performers today and one of the best points gainers on the FTSE 100. Then finally finishing on takeaway delivery, Deliveroo. We're getting that deal confirmed. DoorDash buying the company. It's at 180 a pence. That is actually exactly what they said they would do around a week and a half ago when they initially announced it. We haven't actually come up to that price yet. We're at 175.60. Potentially some people not yet buying that deal in terms of it going through fully. But stock is up 2%. Deliveroo rising on that takeover from a US rival this morning in London.
Joe, thank you very much. Joe Easton from our equities team with a rundown of some of the stocks on the move. And there are quite a few. M&A as a theme, corporate earnings having an impact as well. Just to mention, of course, the politics in Europe continues to play out. We are witnessing in the Bundestag, members of the Bundestag then voting on the future Chancellor, Olaf Scholz. There you can see in the picture there, the outgoing German Chancellor. And we are expecting, of course, Friedrich Merz to be voted in. We have seen these images coming to us from the sort of main floor, but also the side room with the voting booths. We've been watching those pictures as well. We think that is the back of Friedrich Merz's head. I'm not sure I can confirm that. Maybe somebody can. Anyway, coming up on the programme, the US automaker Ford pulls its full-year guidance due to Donald Trump's auto tariffs. We'll take a look at their first quarter results and preview Ferrari's earnings. That's next. This is Bloomberg. Welcome back to the opening trade. It is Tuesday the 6th of May and we are 18 minutes into our European equity session. A pretty mixed picture, fairly flat picture. London playing a little bit of catch up perhaps, but even that doesn't set it apart from the rest much. It's up by 0.4%. We're pretty flat elsewhere. Let's turn to some M&A themes this morning. DoorDash has agreed to buy UK-based food delivery platform Deliveroo in a $3.9 billion deal as consolidation picks up in the European food and delivery space. Charlie Wells is here with an update. Tell us more then, Charlie, about Deliveroo. What can you deliver?
Yeah, I can deliver some news about this deal. Equity value of $3.9 billion. And this is really interesting. You know, DoorDash is the largest food delivery platform in the United States. Deliveroo, we know very well here in London. And they have struggled since they IPO'd. I remember covering it. And that first day, there was such a disappointing slide in that share price. And this just represents a lot of the consolidation that we're seeing in the European food delivery space. You know, so we've got DoorDash saying that they will pay 180 pence per share in cash. They say that they have agreement from investors of 15%, representing 15% of shares. They need 75%, and they would need regulatory approval. So not a done deal yet. But this is a continuation of this theme. We're seeing Prosus agreed to buy Just Eat, a familiar face for people who get delivery here in Europe as well. So a part of that consolidation and a part of DoorDash trying to expand outside the United States into a lot of other markets.
Is there a food theme that runs through this morning?
There definitely is a food theme running through this morning. Bread, you might smell that too. So we've got Associated British Foods confirming that they are in talks with the PE firm Endless on what could potentially tie up Kingsmill and Hovis. So two of the best known bread brands here in the UK. Bread has been under a lot of pressure recently. It's gotten a bad name. People are eating kind of less bread, of course. We know about that.
Guy thinks it's possible to be too old for bread.
It is. You get to the point in life where you are too old to eat. Certainly the amount of bread that I would like to eat.
You've got
There's a caveat.
There's a caveat there. You got a good point. And there's also just this issue of price pressure, right? Consumers, they know these brands very well. They feel like they're too expensive. They're trading down to some of those store brand names. That's creating what this company has called a challenging environment.
Kind of the whole pandemic changed everybody's perception of bread. Sourdough starter kits. I'm sure that's
what are you talking about? I have not heard any.
Well.
Like this is the first time I'm hearing of this.
Really?
Bread. I mean, like there's like a don't eat carbs thing, but is that what you're referring to?
Yes.
Oh, okay. Why are you anti-bread? I thought it was like all okay. Whatever. This is a longer conversation. Charlie Wells, thank you so much, giving us crucial context on M&A this morning. Let's talk about other sectors that are perhaps still reeling from perhaps the COVID impact as well. U.S. automaker Ford down in after-hours trading after it pulled its full-year outlook. The automaker saying it sees a $1.5 billion hit from Donald Trump's tariffs. For more on this and the biggest moves in the auto space, Craig Trudell, who leads our global autos coverage, joins us this morning. Craig, put this number into context for us. We got $1.5 billion of a hit from Ford, $5 billion from GM. How big of a hit is this?
I think it speaks to the idea that, you know, even if you're Ford and you make 80% of what you sell in the U.S. The total impact of $2.5 billion just speaks to how disruptive these tariffs are poised to be for these companies. They think they can offset about $1 billion of that, and yet they're warning about potential for widespread industry-wide disruption to the supply chain. And so, this is by no means a sort of a victory that or being perceived as a win for shareholders or the basis for a buy Ford, sell GM trade. This is everyone's getting hit substantially, and this is a problem for this sector story.
I want to talk about Ford versus Ferrari. Ken Miles, we can go sort of down that road, but we should probably actually separate the two out. Very different businesses these days, of course. Ferrari earnings a little bit later today. Francine caught up with the CEO a couple of days back. This is what he had to say.
That we as a company are used to manage situations that are changing. Yes, there are some cars that will have an increase up to 10%. Look, the number of cars we sell more or less are in the range of 13,000, 14,000 cars. That's what we have been selling. We see 50-50 between ICE and hybrid.
He's getting a Navy one. I don't know how I feel about that, but apparently that's the way he's going. Anyway, the conversation with Francine in Norway a couple of days back. Craig, how different a business is this going to be? This is a company that in some ways produces Veblen goods. There's shortages. The price goes up. Maybe people actually want them even more. But some Ferraris are going to be priced a little higher and some Ferraris are going to be priced a little bit lower. How does that track into their numbers? How different a business is this to the rest of the auto sector?
I mean, Ford, just to put those numbers that we heard the CEO just say, about 14,000 units a year. Ford makes that many F-150 pickups sort of, in its sleep, right? Yeah. And so this is a very, very different business. I do think that there is still some concern that, when you hear him talk about up to 10% difference for certain models, obviously this means that the company is going to eat some of these tariffs. And try to look to offset it elsewhere. I think, this is a company that, is sort of really embraced by investors for its ability to, like have no sort of ceiling in terms of what they can get out of their customer base, and yet there is only so much you can squeeze out of well-heeled consumers who are looking at buying a Ferrari. And so is this a reason to sort of second-guess your ownership of these shares? I think we're even seeing this happen to Ferrari, where, again, this is a sector that, is squarely in the crosshairs of the administration in Washington. And it's not a good time to be in auto stocks.
No, it's a good time probably to own an old Ferrari in America.
Indeed.
That's probably a very nice trade right now.
That's a good idea. Let me ask you about sentiment within the sector then, Craig, because today we thought maybe this Ford story that Critty started on here might weigh on sentiment for European automakers. Actually, Continental, we're going to speak shortly to the management team there, they delivered something better than some had thought, and so the share price higher, and that seems to be lifting car parts suppliers. Where are we in this sort of sentiment journey when it comes to the auto space?
Well, I think when you hear a major manufacturer like Ford warn about fear of industry-wide disruption within the supply chain, I do wonder whether we will see some of the smaller and medium-sized suppliers just not be able to cope with these higher costs, and will that potentially put Continental into a position even more so as a consolidator, and some of these tier one suppliers may be looking opportunistically at acquiring, some of the small and medium-sized companies in this space. We've already seen, over the longer term, this, slow march of consolidation within the supply chain. In the past, you've had manufacturers concerned about, certain tier one suppliers having too much power, being in too much of a position of owning, the supply base. Will we see, potentially that be something that they just can't stand in the way of because of the fact that, we're seeing so much pain across the supply chain is a real question here.
Craig, I'm putting you on the spot here. 30 seconds if you can. When do we start to see a point where dealerships are charging really high prices, or the availability of cars is no longer a guarantee?
Yeah, I think we have not, for all the disruption and the concern we've talked about for the industry, we have not seen that yet. But I will say it's coming very quickly, right? The dealerships have supply on their lots that was sort of pre-tariff. And we saw some car companies sort of opportunistically say, we're going to put promotions out there to kind of calm the consumer down and get them in. Those have been effective, but that supply is dwindling and quickly.
Thanks very much, Craig. Thank you for the update. Bloomberg's Craig Trudell, of course, taking us around all of the news in the auto sector. And we'll stick with that theme next. Earnings at the German auto parts maker Continental hit a 4-year high. CFO Olaf Schick will be joining us next. This is Bloomberg.
This is the opening trade, about 30 minutes into today's session, seeing a little bit of a dampener when it comes to risk sentiment, at least in Europe. Remember, we did end the session in positive territory yesterday, so this could simply be following what we're seeing in U.S. futures this morning. I was looking at a Euro Stoxx 50 story that is down by about 0.2%, but the FTSE 100 still playing catch-up after the bank holiday yesterday, higher by 0.2%. Of course, it is more of a micro story today than a macro story. We spoke earlier with the CEO, Roy Jacobs of Philips. Take a listen to what he had to say.
We need to find offsetting measures. And that's also what we have been driving since actually 2 years. We have to date been delivering 1.9 billion of productivity. We announced that we will drive 800 million of additional productivity this year. We are on track of that in the first quarter with 147 million of productivity savings delivered. And we're looking at every cost line, how we can offset this, so that actually this doesn't go at the expense of our customers and patients who are in need of our innovations.
CEO Roy Jacobs there speaking to us. Philips shares down about 2.3%. We spoke to him earlier as well, and I think one of the key takeaways for me from that conversation was how quickly they're trying to accelerate the nearshoring push, that what is sold in the U.S. is made in the U.S., was sold in China is made in China, and that pivot seems to be a little bit expensive for them.
Yes, and the regionalisation theme, the sort of Asia for Asia, Americas for Americas theme, has been one that Philips has been playing for a long time, and we've spoken to him in the past about that. But this is more specific still, isn't it? This is, as you say, driven by the need in some geographies to have things manufactured in location. I thought it was interesting, the Philips CEO then, he was trying to contrast, Guy, the negativity from tariffs with what he saw as a more positive underlying picture for the business, but that's not what's cutting through with investors today.
No, the stock is lower, as you can see, down by 2%, circa 2%. The story about geographical kind of segmentation, I think, is really interesting, because you think, oh, yeah, we'll just build in America. We'll just build what Americans want in America. We'll build what Chinese want. The problem with that is that there are key parts and component parts and sub-suppliers and all the kind of stuff that goes into this stuff. It doesn't quite work as simply as that. And as we were just having the conversation with the car story, you get a part that's missing, you get a bit that's not there, you get something that's subject to tariffs in a way that you didn't. All of this can upend these supply chains in a fairly significant way. Talking of supply chains, let us move on to another company that is out with numbers this morning. Conti's out with figures. Continental, the German tyre and car parts maker, out with numbers that look to be significantly ahead of where the market had anticipated. The tariff story is, though, interesting, and the company has stuck to guidance, but I'm interested to see exactly how much tariff focus there is within this guidance. So let's find out. The company's CFO is Olaf Schick. He joins us now for a conversation around all of this. Good morning. Thank you very much indeed for your time. So the numbers look ahead of certainly where the street was looking for. The stock has bounced this morning as a result of that. One of the things that I think people were looking for was an understanding of how tariffs are going to be affecting the business. How much of your current guidance that you've issued this morning includes the tariff effect? Kind of how have you accounted for the tariff effect in the guidance that you've given us?
Yeah, thank you for having me. And allow me just a few words first on the Q1, because it's important to understand our Q1 to then also my answer to your question. So we started as expected solidly into the year. As expected, we increased our profit year over year. Automotive, our classical supply business, made good progress. We had, based on sustainable pricing, our cost measures are effective. We're also receiving good orders. Tires business also improved the margin year over year. Good growth in all replacement regions. Continental, our third sector, despite weak industrial auto demand, managed to keep the margin on last year's level. Cash flow also quite good. So we had a good start, or a solid good start into the year in a very challenging environment. Now, the tariffs, if we look at the tariffs, first of all, it's important that we follow our production principle in the market for the market, local for local. This proves to be the right concept. Clear also is additional trade barriers will pose a burden on the auto industry that is global, that is interlinked across the whole value chain, and that is an industry that is anyhow already undergoing substantial transformation right now. So that puts price pressure on the system at the end on the end customer. So based on our solid Q1, we confirm our outlook. However, this does not include potential significant impact caused by trade barriers, by tariffs. However, I also want to state, even if there will be further tariffs, that does not mean that we would automatically adjust our guidance because of our solid start into the year.
Obviously, a lot of kind of production takes place in North America, but North America can include, obviously, Canada and also Mexico. How much of your current product is USMCA compliant? So even if there were to be a tariff hit coming through and we were to see this happening, how insulated are your products from that?
Yeah, that's a good question. If you look at our automotive supply business, most of our imports into the US, our products are coming from Mexico. So that's the large part. Out of that, the vast majority out of that is fulfilling the criteria of the USMCA, so it is compliant. So if that stays that way, basically that's good. Of course, together with our customers, we are further working on increasing that share even further.
Can I ask you a little bit more about this challenging environment you find yourselves in right now then, Olaf, and thinking specifically about the tyre business, as that is the future of Conti with all of these other spin-offs being planned. What action can you take to drive margins higher within the tyre space, given the tariff environment that we've talked about?
Yeah, first of all, in this challenging times, in particular for the economy, but also geopolitically, we believe it's important to be agile, fast, focused, to be faster and have less complexity. That's why we have decided to create 3 strong independent champions. Automotive spin-off listing planned for September. We're on track. Continental, we decided to also make that sector independent, and we look at a transaction possible in the year 2026. We said before, most likely a sale, but we are further analyzing this. That leaves us with tires, as you rightfully say. First of all, this is a very resilient business model. Great products, great team, great technology, focus on sustainability, resilient margins, and we see that in Q1 adjusted EBIT margin for our tire business of 13.4%. So it shows we are on good track. Of course, also tires will further work on technology advancement, will further look at cost improvement, improve efficiencies, and also review the production footprint. But also here, our approach, local for local, in the market for the market for tires, is absolutely the right setup.
OK, so local for local possibly helping then on that tariff question. Olaf, it is a busy day, a busy period for German politics. We're watching the voting taking place in the Bundestag. You're somebody who's going to get an even better view of the German auto space soon. You're going to be moving, I think, to Mercedes. What does the sector want to hear from German politics? What kind of support does the sector still think it is owed by the German political landscape?
Well, it's right. It's an important day for Germany today. We will have a new government. This is what we need. And we need a government now that takes bold decisions, right? So what we don't see yet is positive momentum. And now is the big opportunity to create that momentum, right? The proposals by the industry, and we support that as Continental, are on the table. We need less bureaucracy. We need less rules. We need all together work on improving productivity. We expect cutting tariffs, taxes. So there are a lot of proposals on the table, and we support them. So today, hopefully, it is the opportunity for a new start and to create positive momentum. We are doing all our homework to be competitive as a company, as I said, on the operative, but also on the structural strategic side.
Olaf, it's Creedy in London. You talk a little bit about perhaps getting some sort of leniency when it comes to the likes of taxes, perhaps as you navigate the tariff volatility. When you're talking about your conversations with the German government, are things like, or concepts like subsidization, for example, or manufacturing specifically in Germany on the table? Are those things that you might push for?
Yes, we need better conditions for the German economy. That is clear. And I think now, with the new government, this is the opportunity to create positive momentum. So we look forward to a constructive dialogue.
Olaf, talk to us a little bit about how you're thinking about other parts of the world. We already talked about your exposure to the United States and the tariff story there as well. But with the volatility and how expensive it may be to manufacture in that part of the world, are you looking to prioritize other regions?
Well, we have, if you look, for example, at tires, we see APEC as a growth region. We are directing our capex there, also to North America, but also to APEC. We have invested on our plants in Hefei in China, in Thailand, in Rayong. We are supplying, for example, in APEC, 9 out of the 10 largest NEV manufacturers with our premium tires, right? So we see this trend for NEV, in particular in Asia, is very positive for us with a strong brand and a great product.
A final question. The conversation around the table this morning has been about euro-dollar going to 125, possibly even 130. The conversation possibly that could happen as early as by the end of this year. What would 130 euro dollar mean for your numbers at Conti? What would they mean for the numbers at Mercedes? How big do you think a hit could come through for German manufacturing, European manufacturing, were we to see a move to those kinds of levels?
Yeah, good question. And let's say the FX situation, from our perspective, we started well in Q1. We ended not so well at the end of March. So it's clear to us a strong euro will put pressure on sales and profit at the end. So that's something we carefully watch. And we hope, from our perspective, that the euro doesn't become even stronger.
Great to catch up. Thank you very much indeed for the time and all the time you've given us over the last few years, Olaf. Thank you very much indeed. Olaf Schick, thank you very much, the CFO of Continental.
Now, sticking with the German theme, Germany's new Chancellor, Friedrich Merz, is vowing to hit the ground running after being sworn in today. Bloomberg's Oliver Crook is outside the Bundestag in Berlin, watching as these events unfold, waiting for them to unfold then. A new Chancellor will have new priorities then, Oliver. We just got the view there from German business, less bureaucracy, fewer rules, increased productivity, lower taxes. It's a long list. What will be Merz's priorities?
Yeah, I mean, listen, Anna, we've been talking about cutting bureaucracy in Germany for probably as long as I can remember covering the country, and, you know, that has not really materialized. Maybe now with the sort of renewed urgency of everything that's going on in the world, the years of contraction in Germany, is the time for that to happen. We should say that right now, as we speak, they're counting the votes within the Bundestag. That is the first step in the sort of appointment of Friedrich Merz as Chancellor. We expect to go through all the sort of steps to the end of the day and then have that handoff of power from Olaf Scholz to Friedrich Merz at about 3 p.m. Later today. And when you think about the priorities for this government, as you're alluding to, Anna, there's really three major categories that they're going to have to be focusing. One is going to be foreign policy, the other the economy, and of course the third is immigration. When you think about foreign policy, there is the question of trade, there is the question of tariffs, that of course is looming very large, but also as the sort of stewards of the multilateral order that the United States is moving back from, that is going to have to be Europe that steps up if they want to continue that, and Germany is going to play a large role in that as a major trading nation. When you think about the economy, we've talked about the 1 trillion euros that are going to be injected into this. We've had 2 years of contraction in Germany. If the tariffs hit hard, that could be a third year of contraction. That has never happened in the sort of modern times of Germany, but they also need to deal with many of the structural issues within Germany, digitizing the infrastructure, building out the infrastructure, and of course getting rid of that red tape, as we've heard from every single executive. And then the question of immigration, and this is really the main political question domestically here in Germany, particularly as you see over the last couple of months, the AfD continuing to rise in the polls, and for the first time over the last few weeks, the AfD really taking the #1 slot within Germany. They're basically tied now with the CDU. So a huge amount of urgency, a huge amount of pressure for Friedrich Merz. And we should say the key question here is how fast can he deliver on some of these priorities? We should remind everybody this is a process that began in November the 4th or the 5th. The day Donald Trump was elected is the day that the German government fell. 6 months later, we now have a new chancellor that will be sworn in at 3 p.m. Can he get all of this done very quickly, breaking from the sort of speed at which German politics has usually operated?
Well, Oliver, dive into the AfD angle for us a little bit more then, expand on that, because you talked there about the popularity of the AfD within Germany, but German intelligence services have now branded it extremist. The AfD also, I think, suing the German government for that label. There are reports that the CDU may be softening its stance when it comes to the AfD. Is there any sign of that?
Yeah, so there has been some dialogue around that. There have been members within the CDU that said, hey, maybe here and there we can work with the AfD on some things. But that really was before this report came out on Friday from the federal agency that is charged with the protection of democracy and constitution within Germany, putting out this 1,000-page report and basically branding the entire party of the AfD. Remember, there were certain chapters historically that were considered extremist. Now the entire party has been considered extremist by this spy agency, which gives them more rights to then spy and to look into what the AfD is doing. And the sort of logic behind it, and I'll quote directly from this, is that the party's prevailing understanding of people based on ethnicity and descent is incompatible with the free democratic basic order. This is, of course, something that the AfD has said is completely political. This is supposed to be a totally apolitical investigation, and that is something that has been supported by the United States. We heard from Secretary of State Marco Rubio speaking after this sort of ruling came out, saying that this amounts to basically Germany giving its spy agency new powers to surveil the opposition. That is not democracy. That is tyranny in disguise. Again, all of the mood music, all of the backdrop to the Merz taking over power here in Germany with very, very sort of tense political agenda here at a time when the mainstream politics within Germany need to deliver, and they need to deliver fast.
Bloomberg's Oliver Crook walking us through the dynamics of German politics. We thank you so much for reporting live from Berlin for us. Coming up, we're going to stick with the German theme and the defense theme as well. Drone maker Tekever announcing new fundraising, the latest in a wave of investment into European defense manufacturers and startups. The CEO joining the program next. This is Bloomberg. Well, governments in Europe are ramping up defense spending to the benefit of public companies. Donald Trump's administration reviewing the Pentagon's procurement process, pushing some pressure on the number of contracts and the levels they're awarded at. Where does it leave smaller and privately held players, though? We asked Bob Long of Stepstone Private Wealth.
Their business models are different. Rather than the legacy large primes, they're called, who will bid to the United States government with a PowerPoint, get a cost-plus contract that then, they're typically over budget and behind time. These venture-backed companies will figure out what the government wants and build it and then sell it at a price that makes sense. These companies are growing, the ones I mentioned, extremely quickly because, unfortunately, we live in a much more dangerous world today.
Stepstone Private Wealth CEO Bob Long speaking to this program yesterday, and of course a key defense investor as well. I want to stick with that theme and bring in Portuguese drone maker Tekever, which has today announced fundraising, saying that, well, actually I would say making it Europe's newest unicorn. This is after the company was awarded a deal to produce uncrewed systems for the UK's Royal Air Force and agreed to invest £400 million in the country over the next 5 years. CEO Ricardo Mendes joins the program now. Ricardo, pleasure to have you on this program. I want to pick up perhaps where our previous guest, as you had just heard, left off, which is what the role of private players are when it comes to a defense industry that's largely been driven by these government contracts.
Well, good morning, and thank you for having us on the show. It's a very important day for Tekever. Well, I think your previous commenter was completely right. There's a role for Europe for private capital in European defense and global defense, I would say. We need to move faster. And I think the war in Ukraine has shown us that it's all about autonomy, artificial intelligence, connected robotics. You see drones everywhere, as you're showing now on the video. And it's fun to in this new paradigm, you need to move at pace. So you basically need to invest ahead, build products ahead to be able to deploy faster and win in this cat and mouse game that unfortunately warfare has come into. And so it's fundamental. The role of private capital is essentially to unlock this and to allow us to move much faster.
Good morning, Ricardo. It's Guy. Can we move fast and scale at the same time? This is the big challenge that increasingly everybody's talking about, trying to figure out how to scale this stuff quickly. I was reading a piece in the Wall Street Journal the other day talking about the US Army embarking on its biggest overhaul since the end of the Cold War. It's basically re-equipping all its divisions with drones in the way that it's never done before. But that requires scale. But there's also a kind of this challenge of trying to keep up and trying to pace this whole story. Where does the biggest challenge lie? Is it in the technology, or is it in the scaling of the technology?
Guy, you're absolutely right. So it's it's at the crossroads. So the challenge is, how do you keep up with developing technology that's evolving in weekly cycles? It's not even monthly anymore. It's in weekly cycles, and you need to keep a pace. You need to be the first mover, you need to think ahead, and you need to be able to deploy these capabilities. But then you need to be able to do it at a very significant scale. And this is the challenge. It's not so difficult. It is challenging, obviously, but it's not so difficult to do one or the other. It's extremely difficult to do both at the same time, and that's the problem that we are solving essentially. It's Tekever is coming at 1,000 people very soon. We'll be 1,200 before the end of the year, precisely to be able to lead from an innovation point of view. So always stay a step ahead, but at the same time keep doubling or more than doubling our production capacity to be able to sustain this Europe-wide and globally wide.
Ricardo, on that same subject, how quickly are you able to incorporate lessons and learnings from the battlefield in Ukraine into the products that you're producing?
Well, that's an excellent question, because answering that question is at the core of making this work properly. So one of the things that needs to happen, and that we've been fortunate enough to to be able to do well in the last 3 years, is you need to short circuit the relation between whoever is in the front line using the products and understanding the problems and the challenges every day, and the engineers, product development, R&D teams, etc., that are working to support them. And this relationship is usually not linked together. Usually what you have in defense, exactly as your commenter yesterday was saying, is companies come up with a PowerPoint, and then there's an idea and requirements and so forth, and then tenders, and 5 years down the road or 10 years down the road, you have a capability deployed. This cannot work like this. It needs to be a direct relationship with whoever is in the front line. That's, for example, why we've had people in Ukraine for a long time. We're doubling down the investment in Ukraine precisely to be able to support them better and to have lessons learned every day. This is fundamental, because to feed the cycles of development and innovation.
Ricardo, as you say, the cycle is moving fairly fast. We need to catch up again soon to see how it's going. Ricardo Mendes, the Tekever CEO, thank you for your time this morning. Busy day ahead. Yeah, busy day. We've already had some PMI data out of Europe. The German and French numbers just dropped. They looked a little better than we'd anticipated, but the euro hasn't done much, so we won't linger on that too much. We've got lots coming up, though, Critty, in terms of the day ahead. We're, of course, focused on German politics. We know Mark Carney is also going to be the Prime Minister of Canada, and is going to be in Washington, and so we'll watch that conversation along with anything that we hear from Besant.
Absolutely. A litmus test, perhaps, both for the Treasury, but also from the Government of Canada as well. What kind of precedent, what kind of negotiations they can have with Donald Trump's administration. Is there a roadmap to have ahead of the other trade negotiations around the world? Bloomberg TV and radio, of course. We'll have plenty more from the Milken conference this week, speaking with the biggest names in business. Don't miss it. This is Bloomberg.